Welcome back to the Compass Mining Podcast. My name is Jarrett, and I am here today with Lee Bratcher from the Texas Blockchain Council. And if you're listening to this now, you may be listening on Spotify or YouTube once we put this up. But this was recorded live on X, LinkedIn, and YouTube. And the whole idea here is to have Lee on and to just kind of do a roundup of 2024 and really look ahead at 2025. If you've been in Bitcoin, if you've been around Bitcoin mining, if you've been in the digital asset space, I know that that's some of the nomenclature that Texas Blockchain uses. We have been waiting. Me personally, I've been waiting since 2021, 2022. It feels like we're finally coming out of the bear and we're about to get full escape velocity into the bull market. So it's a very exciting time. And I am just super humbled to be able to share stage today with Lee Bratcher. So Lee, how are you doing?
Jarrett, I'm doing great. Ready for the new year. And it's going to be 2025 is going to be an exciting year. I think there's very few of us that are looking at 2025 with any sort of like melancholy, right? I think it's going to be a good year. Don't know how good. Of course, history, if history is any guide, it's going to be a good year for Bitcoin for sure. There are world events that change that. So we don't want to get ahead of our skis, but I'm optimistic.
I am also super optimistic, and it's good that you called out that we should be cautiously optimistic because there are world events, there are macro events that will potentially influence Bitcoin price, Bitcoin mining, the overall industry of Bitcoin mining. So these are things to constantly keep in mind, and I think we're going to touch upon some of those today. So we have created a slideshow that's basically just going to give us a little bit of a framework, a little bit of a guidance as we kind of go through the 2024 roundup, and then as we look ahead at 2025. So to kick this off, this is what the agenda will look like. We're going to do an industry review or a roundup, just really talking about 2024. And when Lee and I met and we were like, okay, what could this look like? We both agreed that focusing on the past maybe isn't as exciting and maybe as important to the people watching as really looking ahead at the future. So we are going to talk about some of the things that happened in 2024, both as an industry, and I'd like to share some things that Compass did as well. And hopefully you share some big wins that Texas Blockchain Council had. Then we're going to get into the 2025 outlook as we really start to look ahead, talk about some industry narratives that are maybe exist today and likely will continue, talk about Texas and national policy and regulation. This is definitely going to be front and center, especially with a new presidential administration starting in 22 days. Also talking about then the challenges and opportunities that 2025 will bring. And finally finishing off, because I think that this is important, on the upcoming events list and just talking about where Compass and where Texas Blockchain are going to be physically this year, because the IRL is so important in this digital landscape. So let's go ahead and let's just start right there. 2024 review. I have some notes I could share if you want me to kick off, or do you want to share? And maybe it'd be good for us to share for our organizations, and then we can get into the larger industry.
Sure. Yeah, I think for us, the year started off with a lot of questions around the information administration, the Energy Information Administration's sort of unlawful mandate against Bitcoin mining to share and disclose private information, contractual information, energy consumption information. Some of that was, some of the information included in that mandatory survey was lawful, and we would have complied, but it included a bunch of unlawful stuff, and it was approved in an unlawful way. They avoided some of the proper steps and procedures, declaring it an emergency when no such emergency existed, and so we sued the federal government and won within a matter of 12 days. The federal judge in Texas that saw that case very quickly told the Department of Justice that essentially that they needed to rethink and put a stay on the order. And then within 12 days, the Department of Justice capitulated, and we haven't seen anything from them since then. Now, we did have a couple calls with the EIA about what a survey could look like. And in the meantime, the Texas Public Utility Commission came out with a survey that was done the proper way. We still don't love it, but it was created through statute, through a law that passed Senate Bill 1929, and that passed about 3 years ago now. And so they're finally implementing that bill. It has some questions about energy consumption in there, but that information is to be held private by the Texas Public Utility Commission and for the use of the energy grid professionals only, which in Texas is the ERCOT ISO. So they went about the right way. We did not, you know, oppose it. We actually were working with them throughout the process, and so um, those are the things that kind of strike me as sort of interesting bookends, right? The federal government doing it sort of well, not sort of, it was very much unlawful, in an unlawful way, and then a state government coming about it, doing it the right way. It took much longer, but that finalized here just a few weeks ago. So kind of bookends the year for us. We're going into a legislative year in Texas in January. So this year is sort of our year to kind of prep, store up some political capital, and I'm sure we'll get to that kind of stuff later in the show. But I'll hand it back to you, Jarrett, for kind of the Compass 2024 updates.
Yeah, and thank you for mentioning the EIA, because I think that that's, like you said, it bookends, and it also, one of the things, I'm going to go on a little tangent here, but one of the things that's so unique about the United States is our relationship between the states and the federal. I spend a lot of my time in South America. I live in Colombia some of the year, and people, everything's basically national there. And so when I talk about, well, I work for a company, and sometimes in certain parts of the country, maybe they're more welcome than other parts. That just doesn't really register. So I think that that's both. It's like a plus. It's a constant opportunity and challenge that the United States has that I think makes the United States honestly unique, and potentially better than other countries when it comes to solving local and national, uh, you know, uh, challenges or new tech. So, but talking about some of the stuff for Compass, and I basically went back and I looked at all of the press releases that we have released this year, as those are normally the bigger ticket items that we're really excited to share with the industry. And so in January, we had a new CFO announcement, which was really great, having Eric join the team. We launched Accelerated by Compass, which is our managed services, back in May. Iowa expansion in September, new Nebraska facility in October, a Mindshift partnership, which is a company in South Korea, which allows us to have access to the South Korean market to be able to have people, buy and host mining equipment. Kentucky expansion in October, Iowa expansion recently in November, which was really, really exciting for us. And it's definitely a part of a narrative, which is the vertical integration. And as it was our first owned and operated site. And then finally, Texas 25 megawatt expansion in December. So you can kind of see the trend, right? We're getting more megawatts online. That's what's been happening throughout basically the entire year. So I think from a Compass standpoint, that's what we're excited about. And then from an industry standpoint, I think one of the things that happened this year, which kept with the trend that was 2022 and 2023, was just hash rate continuing to increase. We started the year pretty far away from where we are today, and hash rate just continues to increase, and difficulty continues to increase. And on some level, they're almost outpacing the Bitcoin price, even though we've seen Bitcoin price since January of 22 go up 4.5x or something like that. It went down to 15,000, and it's gone all the way up to 108,000. So I think from an industry standpoint, while we're seeing Bitcoin, the underlying asset that we're all really excited about, and the technology, from an industry standpoint, with difficulty and hash rate almost outpacing that in its growth, it's continued to make things really, really competitive. So with the landscape being so competitive, that's where you see Compass in 2024, and many other of the pubcos and other miners really bringing hash rate online by getting more energy online as well, or getting more energy to their hash. So I think that that would be probably the other thing. But if you're ready, let's dive into 2025.
Let's do it.
So 2025 industry outlook. If it's cool, I want to pass you the mic because I think you probably could start to continue. Actually, I think that let's just leave this slide like this, and let's go into industry narratives. Industry narratives for 2025 for the Texas Blockchain Council. What are the things that you guys are looking at, both locally and nationally? I know it's called the Texas Blockchain Council, but I also know that you guys are fighting fights that are national, not just local.
Yeah, that's right. And we do collaborate with a lot of other states and provide best practices in Bitcoin mining, advocacy, energy policy. A couple of narratives. I think one is, the energy consumption narrative is still upon us, right? So now it's a little bit more urgent with the increased consumption needs of AI data centers, and I think that was unexpected, but we certainly now see the future there. I mean, for most of us, it was unexpected 2 or 3 years ago. We would not have guessed that. Most of the grid and transmission planners would not have guessed that either. And so in Texas in particular, there was a study that came out a couple months ago that showed the Texas grid doubling in size in the next 6 or 7 years. Obviously, that was based on some flawed analysis, um, thinking that all of the projects in the interconnection queue were going to come to fruition. Only a small percentage of those will come to fruition. But for a grid that's used to growing, like the national grid is used to growing, 1 to 2% a year, very, very slowly in modern times as we become more efficient with our energy consumption. The growth that we probably will see, both in Texas and nationally, is going to be many, many times more than what we've seen in previous years, right? And so I think there will be from a policy perspective, a continued battle lines being drawn with regard to AI consumption, Bitcoin mining consumption, who's paying for transmission costs. I think we should get into that a little bit later because that's a little more nuanced. But for the Bitcoin miners out there that aren't really following these narratives, the transmission costs, what they're calling cost allocation, is a conversation that's happening all over the country and all different ISOs and all different utility service areas. Um, that looks a little bit different in a regulated area versus a deregulated area, but it's still the same thing. Are we going to fairly distribute transmission costs, or are we going to pick winners and losers, and have certain types of industries pay more for transmission? That's a narrative that I think we should dive into a little bit more with some more specificity in a moment. I think from the business perspective, though, um, we're going to see increase in difficulty, more hash rate coming online, no doubt. Hash price hopefully hit a rock bottom a couple months ago after the halving, and we're now seeing it, increase to still not comfortable levels, but in that $50 to $60 a petahash range. Um, I think that likely stays, assuming hash price increase, Bitcoin price likely increasing again. Macro events could change that, but I don't really foresee it going lower than where we saw it a few months ago, right after the halving. That seemed to be the bottom of hash price. And it's probably unlikely to see like a 2021 type run up as well, just because of how mature the industry is and how quickly hash machines can get online. Now, the caveat to that is you do have a few facilities that are being transitioned. Of course, the ones that are um, have the factors necessary, right? Like the core scientific Denton facilities being transitioned to an AI with their partnership with CoreWeave, right? So there will be a few others like that happen to be located near major metro areas and have some of those other factors that allow those facilities to be transitioned. I think you do see a convergence in the profitability of AI compute with Bitcoin mining compute. A couple months ago, it was like way off, right? AI compute profitability was way up here, and Bitcoin mining was right after having it like dirt cheap levels. I think we sort of converge somewhere in the middle where AI becomes, that arbitrage gets closed a little bit. There's more compute out there that starts to meet the needs of some of these models. And then, of course, when you transition and you have more of the inference compute versus the training compute, those market dynamics, we don't really know what that's going to be like right now, because most of the compute needs right now are on training, and in a couple of years, most of it will be on inference. So we've really never seen what that market dynamic could look like. So with a few caveats, I'd say we've probably hit the bottom as far as um, Bitcoin mining profitability, but I also don't see like a huge opportunity and run up. I think it's going to remain profitable because of some of those factors where you get some hash rate taken offline, some facilities taken offline, and a steady increase in the price of Bitcoin. But I think the miners are there to close that gap pretty quickly and put hash rate online. And this is a brutally competitive business, and I think you guys at Compass know that, just like all the other pubcos and private miners and even the home miners, it is brutally competitive, and it's not for the faint of heart.
It is not for the faint of heart. Something I said before we started recording was just that Bitcoin mining is so Machiavellian. And I don't think people understand that from the outside. They just think you plug electricity into a machine and then Bitcoin just like pops out, right? Like, candy out of a gumball machine. It is. I'm glad that you started here with the energy because I think that energy is really Bitcoin mining. And I was just looking on Instagram this morning, and Business Week has this, it has this picture of, I can't tell what the actual AI, like where, excuse me, where this nuclear power plant is, but it says, can the US power industry meet AI's steep energy demands? This is something that I've seen across mainstream media being reported. And if you are on X, people are constantly talking about the energy demand, meeting the demand for Bitcoin expansion, Bitcoin mining expansion. And then obviously AI plays a really big part of that. So I do think that that's a narrative that's absolutely going to continue. And one of the things that I constantly think about, I'm going to shout out Anthony Power, who is a writer for us, and many people know him in the industry. I think he's probably the best analyst when it comes to looking at pubcos and understand mining on a mass scale. He wrote an article back in July, and he was like, look, all these people, all these pubcos that are taking some of their Bitcoin hash and they're, renovating their facilities to be able to take advantage of this AI. He said, that's great, that's good, but what's going to happen if Bitcoin hits 200? Bitcoin hits 250,000, and no one knows, right? It's a very kind of like, let's just ask the question to ask the question. But I think it's going to be interesting, and I believe I align with what you said, which is like, I think the gap will close. Right now, there has been this arbitrage moment where it's like, if you can get in and get these things set up. But the other thing that lives rent free in my head is what Shannon Squire says, our chief mining officer. And he's like, it just takes a long time to get some of the HPC and some of the AI compute facilities off the ground. Whereas Bitcoin mining, you can spin it up a little bit quicker. And basically, you can close the gap from where you are putting your capex into where you can start getting your opex running and get things going and get some Bitcoin back. And this touches upon a couple of the other topics that we're going to touch upon, but it's like with what Anthony said about the AI versus Bitcoin mining and where should you be putting your investments. I think that if, and we're going to get into this, I don't want to spoil it, but I think that if Bitcoin becomes something that everyone wants on the planet, even though AI is going to be something that other people want for other reasons, I think that many of the miners, I'm not saying they're going to go back and, some of the pubcos are going to change their investment strategy, but I do think that there could be some FOMO. But we'll see. We'll see. And then, yeah, industry narratives. Let's just go on to the next slide to just kind of keep things going. And policy and regulation, I want to kick this back to you. But before I do, I want to bring up a comment from the one and only Tatum K. He says, wait, the EIA stuff happened this year? 2024 was a long one. Now, Tatum, my apologies. You had said this originally when we were talking about the 2024 round of the 2024 review, and Lee had kind of gone over that. But yes, Tatum, that was this year. And I think that was probably a good maybe segue to some of the policy and regulation that we are kind of confronting today. And if it's okay, since we're on policy and regulation, I'll go ahead and I'll share the blockchain advocates, file suit challenging the IRS DeFi regulations. And if you could talk about that and then, talk about it in the context of how it's going to affect Bitcoin mining and Bitcoiners, I think that'd be great.
Sure. Yeah, we just joined in a lawsuit with two other industry associations, the DeFi Education Fund and the BA, the Blockchain Association, to file a lawsuit against the IRS. Their midnight rulemaking, where they finalized a broker rule that looped in DeFi front end developers, looped in unhosted wallets, and that was really, our kind of hill to die on, if you will. There were some versions of this where we were not going to sue if they came out and had a broker definition that was sensible. But this definition, if interpreted broadly, which we have to assume it's going to be interpreted that way, would loop in like unhosted wallets, right? And so you can't, as a wallet software developer, be expected to provide the kind of information. It's just not possible. You're not going to be collecting that kind of information, transaction information, information about who you're not. It's not even your customer. It's who this person that's using your software is sending value to over the internet. You have no way of knowing that. And that's actually purposeful. It's built that way. You don't want to know. You don't want to store all that data. And so for the IRS to require that of unhosted wallets is a little bit severe and untenable, really. And so this lawsuit dropped a couple days ago. If you're watching live, it was just 2 or 3 days ago. Um, we feel pretty confident this is just the Biden administration's last ditch effort to you know throw some darts at the digital assets industry. It certainly affects mining. I mean, while it's I don't even explain how it affects mining. Of course, unhosted wallets are pivotal to the whole Bitcoin ecosystem. Um, and what I would say is, what, regardless of the outcome of this, I doubt we're going to see an outcome where the administrative state under a future Trump presidency is going to push the digital assets industry out of the United States to the extent that this broker rule would. I think not only are in all likelihood, this lawsuit will play out, or we're going to get some changes within those, within Treasury, within IRS, that allows them to rethink this a little bit. And so, I've spoken to people at the IRS before. I think many of them who are civil servants there, they're working to increase compliance with, tax law, which in every segment of the economy is something that's their job, and we can't fault them for that. But I think some of the political folks, appointees, if you will, at the IRS, I would guess we're pushing for some of these more draconian, broad definitions over the perhaps reasonable objections of some of their colleagues. Now, I'm purely speculating here, but that's generally what I would sense, and so I don't think that the appointees from the Trump administration will be so unreasonable.
So, just so I understand, we shouldn't be worried. I shouldn't be worried about this probably going into law and affecting me because, as many people will say, you don't want three-letter agencies at your back, and especially not the IRS because they have interesting powers in the United States. So, you're saying because the Trump administration is coming in, this isn't necessarily something that should keep anyone up at night.
I think there's plenty of things to keeps everybody up at night, and I would not add this to the top of the list, right? Um, we're certainly being vigilant and making sure to defend the rights and freedoms of folks in the United States that want to exercise their property rights over their Bitcoin, over their assets. And I think those those concepts of property rights and the constitutional provisions, and even some of the Administrative Procedures Act provisions that are contested in the lawsuit, will win the day with a new Congress. Eventually, there will likely be legislation, perhaps not to address this specific item, but we will see market structure legislation, stablecoin legislation in 2025, and that's helpful for these regulatory agencies that are just operating without congressional guidance. Again, I don't think perhaps there will be, but I don't think there will be specific legislation on this exact topic. I think there will be either success from our part in the Northern District of Texas during this lawsuit, or some more reasonable folks coming into the Department of Treasury that can have conversations about this.
One of the things when I was creating this particular slide and thinking about our conversation was like, and please correct me if I'm wrong, it seems like the Texas Blockchain Association, like many other advocacy and lobbying groups in the United States, since the beginning of when they were founded, have been largely, unfortunately, kind of playing defense and just being reactive. And the government saying, nope, we don't like that over there. And you guys saying, wait, 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 that's not constitutional. Or no, we don't like that over there. And you guys saying, wait, 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 that's going to kill thousands of jobs. This is why we need to keep this because this, spurs America's ability to continue to innovate and grow. Do you think in 2025, from a policy and regulation standpoint, you guys are going to be critiquing the other way? And what I mean is there's going to be stuff maybe coming out from the Trump administration because apparently there's going to be a quote crypto czar or someone who's within the administration who has been given the reins to say, you are the crypto person. Tell us what we should know about this. Do you think there's going to be the other way? And this was interesting to think about, and I'm excited to ask you, kind of a hot mic, but it's like, do you think there's going to be something that they're going to put out where you're like, whoa, 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 that's a bridge too far. that will cause these problems or allow maybe bad actors in when we know that that's not something we want.
Compass Mining makes Bitcoin mining accessible to everyone. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary services. Start mining in as little as 48 hours with our turnkey hardware online and mining directly to your Bitcoin wallet within 2 business days. Discover more at compassmining.io and see how we can power your success.
Yeah, I don't think we're gonna have much, unfortunately. It'd be nice if we did. The only thing that I could see is, um, if we got a de minimis exemption for Bitcoin, the asset, relative to capital gains, so that, if you were to buy Bitcoin and for the purpose of using it, for buying the proverbial cup of coffee, you would not have to pay capital gains on that. That would not be a gains transaction, assuming that you were within some sort of threshold. Um, for foreign currency, it's like $200. If you made less than $200 on the transaction, if you bought euros and euros didn't appreciate by more than 200, you wouldn't have to you wouldn't have to pay capital gains on it. In this case, I've heard of some people talking about a very large threshold of like thousands of dollars, which would be amazing. Um, might be a little bit hard to sell for people who are like, why the foreign currency, the minimum amount is $200. Why would it be $10,000 for Bitcoin or something? That would be the only thing. I still think we're going to be, kind of fighting in the trenches. Even with the Trump administration, not necessarily fighting the administration, but more so, um, working to educate lifelong civil servants who may just not understand the industry yet.
Yeah, and I think that'd be a great problem if we all of a sudden could spend up to $10,000 in Bitcoin and not have a tax event. I think that would change things drastically, and I can just only imagine that the fees would increase, which would be great for the miners. So, um, many of the things I want to talk about in relation to policy and regulation actually fit really well under the opportunities and challenges. And so, if I could, let's kick off a couple things now. The Bitcoin National Reserve wouldn't directly impact for Bitcoin mining industry, but it would indirectly in the sense that it ideally would start to create some of the game theory nationally and globally that people have been talking about when it comes to Bitcoin being this perfect money, being this solution that's outside of the bounds of any one government's control. Can you talk a little bit about the National Bitcoin Reserve and kind of how Texas blockchain is approaching it? And just, maybe you can please interject your own personal thoughts because I'd be very curious to know.
Yeah, I don't bet against Polymarket much these days. So I know Polymarket is tracking this, and so the likelihood of a Bitcoin strategic reserve happening, it changes on a day-to-day basis on Polymarket, and I kind of ascribe to that's probably the current odds because people with money on the line and skin in the game are very much closely following this. Um, I'd say there's two different outcomes here, and I don't know the Polymarket contract if it pays out, if the United States just moves the seized Bitcoin into a strategic Bitcoin reserve, or if the only way it pays out is if the United States actually buys Bitcoin for a strategic Bitcoin reserve. Those are two very different things. The former being much more likely than the latter. Yeah, I think the Senator Lummis's bill is not. While I would want it to pass this year, I think it's got a steep road ahead. I think it's a much lighter lift for the federal government to just claim or move those assets that are with the U.S. Marshals that could be auctioned off, move that into a strategic Bitcoin reserve. I think at Treasury, one of the government affairs folks could probably correct me the exact methodology of how you would do that. But what we're watching too is state Bitcoin reserves as well. It's a little bit different. You don't often see a state government buying assets to be put on a reserve. I mean, there are examples of it certainly. Um, Texas has assets in reserve, gold and other things. Um, the Texas Strategic Bitcoin Reserve Bill would actually not require the state of Texas to buy Bitcoin and put it in reserve. It would just require the comptroller to take in Bitcoin donations and put it in a strategic Bitcoin reserve. The reason why we wrote it that way is because it's unlikely that a bill with a high taxpayer appropriation to it would pass. Of course, the federal government can just, print more money to buy Bitcoin, which is a really, attractive part of history that we're in right now, where the US dollar is the world reserve currency and we can borrow in our own currency. And very few or no other countries have that exorbitant privilege at the moment. And that's certainly why Senator Lummis's bill is a good idea and why we would hope it would pass. Again, I think it's probably going to take a couple more years for that one to get through. But a Texas strategic Bitcoin reserve could pass in this session because there's not a large fiscal appropriation. There's not a large fiscal note attached to the bill. In fact, it could be free to the state of Texas. There could be very few, or if any, costs associated with starting up a Texas strategic Bitcoin reserve. And then you would have people, just patriotic Texans who would like to donate a very, very small, probably, portion of their Bitcoin stack to this reserve. And then perhaps even some corporations that want to feed into game theory. And I could see MicroStrategy potentially donating a Bitcoin to the Texas Strategic Bitcoin Reserve because they are feeding into that game theory of other national governments buying it. And if MicroStrategy donates one Bitcoin, the price of Bitcoin goes up by 0.5%. That is a very good investment for those shareholders, right? They hold, correct me if I'm wrong, but something close to 1 million Bitcoin, right? So it's pretty wild where we see MicroStrategy at on that front. So they could certainly benefit tremendously from that.
Yeah, I actually haven't looked at the amount that MicroStrategy has currently on their books, but I know that it's constantly growing. I just assume it's one plus whatever I think it is. I love the breakdown of the difference between the US government taking the Bitcoin they already quote have on their balance sheet and just saying, let's protect it, let's put a wall around it, as opposed to them creating another account and saying, let's dump Bitcoin into this through the printing of money, right? So I think that those are two different things. And then hearing about Texas as well is very interesting because I could imagine that there's some wealthy Bitcoin Texas rancher who's super excited for that to happen. So he or she or they can just start donating, I don't know, zero point 0.1 Bitcoin a month or whatever it is. And I think it's less than about the amount that they would donate and more about the symbolism and what that means moving forward for Texas as a state. The opportunities and challenges I also wanted to talk about. We just talked about an opportunity, I think, is the Bitcoin Reserve. And the challenges I want to talk about is the overall Trump administration coming in. Donald Trump was at Nashville. He got up on stage. He was, he pumped the price, even if the price didn't go up, he pumped Bitcoin that day, and I feel like it could be a double-edged sword only because people see Donald Trump coming in and many Bitcoiners have been like, okay, this is the year for Bitcoin. Now, you can say this is the year for Bitcoin. Aside from this, like you said, if you're just looking at history and you're looking at the cycle, that's a separate thing. But then you sprinkle on the Donald Trump and his crypto administration coming in. My worry and the challenge could be that it's not going to be as fun in the sun as everyone thinks it is, because I think everyone thinks that he's going to get in day one, he's going to free Ross, which is more of a symbolic thing and a kind of a cultural thing, I think, for Bitcoiners and people who are into the philosophy of Bitcoin. But the challenge is maybe he's not going to do that. And I say that because today's December 30th. And if you're listening to this, you've been to a New Year's party. I'm assuming you've been to a New Year's party. And with all the New Year's parties I've ever been to, the ones that were hyped the most were not that great. The ones that I thought were going to be okay, they turned out to be amazing, right? And a lot of times life is just about managing expectations. So for you and the Texas Blockchain Council and maybe some of the other advocacy and lobbying conversation, policy and regulation conversations you're having, what is your overall sentiment with the Trump administration coming in, and how do you think that that's going to influence? Is it going to be like that amazing party that everyone thinks it's going to be? Or is it maybe going to be a little bit more understated? And where do you think it's going to land, especially for Texas Bitcoin miners and for the Bitcoin mining industry? And that was a large question. I'm sorry.
No worries. It's a good question, Jarrett, because you're exactly right. Setting expectations is the right thing to do, especially since the biggest financial impact on Bitcoin and on the macro environment is not the Trump presidency. It is whether or not we have loose or easy monetary policy or not, or where we are in that spectrum, right? And the markets threw up a little bit 2 weeks ago when Jerome Powell came out and said, you know, their forward-looking guidance was not as bullish. I think some of the commentary afterwards with it, they're expecting maybe just two 25 basis point cuts in 2025 rather than four as previously expected. And so you saw everything sell off, equities, except for bonds, but equities, Bitcoin, all the risk assets sold off. That is going to make a much bigger difference than, David Sachs as the cryptos are. I think David Sachs would probably even agree with that himself. Um, so what I think there are opportunities. Certainly, I think the challenges with for Bitcoin miners are not going to come from the Trump administration. In all likelihood, like I said, they're going to come from those macro movements, whether both in the U.S. and Europe and Asia. But what I am most concerned about actually is the conversations with utilities, with in the energy conversation around transmission cost allocation, because the price of Bitcoin being at 94 or 104 is, that obviously has a material impact on a Bitcoin miner, but the power costs, say Bitcoin miner is paying X for transmission, and then because of a rate change or tariff change, or because of a policy change, they're now paying Y. I think that delta is going to be far more significant, and it's a part of the ecosystem that the analysts, it's just underappreciated part of profitability or lack thereof for a public Bitcoin miner or a private Bitcoin miner, or really anybody who's doing large scale industrial Bitcoin mining who potentially could see their transmission costs go up. I'm not saying their power costs are going to go up, because that's a very well understood market. There's forward curves. There's you could hedge your power costs. You can do the Texas hedge, as Gideon Powell would say, and Jamie McAfee would say, by just riding the spot index price. But what people aren't talking about is, what if there's a tariff change? What if there is a change in transmission cost allocation? That's what's most worrying to me. And in Texas, it can't really improve. They're not going to make it better. The only direction is for large data centers to get targeted, right? To get targeted, pay a larger share of transmission costs than they otherwise would. For Bitcoin miners, that's unique because we're very flexible. So we don't really add marginal megawatts to peak demand. But there's a lot of other, transmission cost allocation questions out there that are swirling, that I think we should all kind of be cognizant of, and be ready to sort of uh, defend the position that a flexible load like Bitcoin mining it is a very real asset and should not be charged more than other loads, just because the political winds for the last couple of years have been beating it. It's been very popular in the media and politics to beat up on Bitcoin mining. And it's going to be very popular to beat up on AI as well, AI energy consumption. So I think, whether or not AI load is flexible or not right now, it's not flexible. Could it one day be flexible with the right software and the right, tooling? I don't think any of the big hyperscalers really are wanting to be flexible, but could they be forced to be flexible in certain circumstances if the economics are just too good to not be flexible? Maybe they, change their tune a little bit and use their backup generation to sell into the grid and let their model, their inference, go down for a little bit and let it be used by, or picked up. The slack is picked up by a data center somewhere else. That all remains to be seen. I think those are big open questions, and a lot of people have really strong opinions about them. Um, my answer, my opinion is essentially we don't know yet, and I've heard really cogent arguments on both sides. But one thing that I do know is transmission cost is the number one risk factor for Bitcoin mining in 2025. I don't think we're going to see Elizabeth Warren beating us up. I mean, she'll try to, but she won't have any power in the Trump administration or in the Senate really anymore, because the Democrats lost the majority. So I really don't see large political threats coming from DC, although we're still fighting those battles that we discussed earlier. I think the biggest concern is um, state state governments, and not necessarily state governments that don't like Bitcoin, but just state governments that are trying to figure out how to apportion transmission costs um, fairly. And that's really where we need to spend the majority of our time. It's not sexy work. It's not like announcing a national Bitcoin strategic reserve, but it is incredibly important, both in the deregulated spaces and the regulated spaces, right? It's obviously a different mechanism that those transmission costs would be allocated in regulated versus deregulated markets, but is the most important challenge that I think we're going to face as an industry in 2025. And I'm sorry I held that to the very end, but that's what's on my mind right now, that I think most people in the Bitcoin mining industry are not yet thinking about.
That's, first of all, it's good that you held it to the very end and you didn't, try to spill all the tea in the midst of our. We had a technical disruption here. It's interesting that that's what it could come down to, because what I hear from this, and this is not the first I've heard about this, but hearing it from you, I think you laid it out really well. It's great that you've heard arguments on both sides. Is that it's like you have this XYZ industry, Bitcoin mining, is taking energy from the grid. Not taking energy, it's buying energy from the grid. That's all it's doing. But because it's has a stigma to it, to maybe put a target on its back, it feels so unfortunate. And I'm hoping that we move away from that. And now going into this, what I want to ask, as we're in the opportunities and challenges, is around tariffs. And if that's something that Bitcoin miners need to continue to talk about. You just basically say, hey, the transmission costs are going to be the number one threat, right? They're the number one threat. But for me, when I look at tariffs, I find it to be interesting, because I could see a world in where it's a little hypocritical, where it's like Donald Trump is like, yes, Bitcoin mining, great, energy, great. Those are two things that he's been pretty pro on, especially energy in the United States. So let's live in the world where he continues to be pro on those, but then he's also like, anything coming from abroad that could be taking U.S. jobs abroad. So we want to, protect our production and our labor jobs here. Where he then maybe puts a tariff on China, and I'm going to call China out, because that is where, and anyone listening to this knows that that's where all, if not, 98% of the machines, at least, that are being made come from, or the companies are there, or there's some tie to China. Right now, I know that Bitmain is currently moved to hopefully get some fabrication going in the US. But part of me is like, that could be a really weird world where, yes, Donald Trump is pro Bitcoin mining, he's pro energy in the United States, he sees the value in that link. And there was a moment in Amanda Fabiano and some of the other people from the Bitcoin mining industry went and they met up with Trump, I think in Mar-a-Lago. And I think he and his team, if not he, his team understands the value of Bitcoin mining to the energy grid in the United States. So it's like, you could have a world in which he's pro Bitcoin mining and he's pro energy, but at the same time, he's like, we have to put tariffs on China. Is this something that is also potentially, down the road for you, where you're talking about now with constituents in Texas or nationally?
Yeah, I'm not as worried about tariffs, and I'll tell you why, Jarrett. So companies have been historically very good at optimizing their supply chains around new realities in the tariff ecosystem. And for the audience, now we're not talking about like rate change tariffs. We're talking about, on the transmission side, we're talking about like trade tariffs. And so I'm really optimistic that some of these international companies will be able to manufacture in locations that allow them to avoid most of those tariffs, including opening up facilities in the United States. Most of them don't manufacture in China anymore, but as you said, they have a connection to China, which then makes them vulnerable to tariffs. So we don't need to get into all the nuances of that, but we know that a lot of the in manufacturing is in Malaysia and other places like that. But I do think that this will result in more manufacturing happening in the United States. And of course, maybe you have a little bit of a cost increase there, or quite a bit of a cost increase, but you probably defer a little bit of that in the shipping costs. You're not having to ship the machines as far if they're manufactured here. But I really think that there's a lot of experience out there in optimizing around tariffs. And while you may see a short-term bump in machine price, it's going to be negligible relative to some of the other things that can move the market, like where the price of Bitcoin goes and transmission costs. To throw a little bit of an example at you, um, it's 25% tariff on machines coming in from China. I think that's kind of what it's been previously. That could be increased or decreased. But say that a large manufacturer is able to um, sort of mitigate the majority of that by changing locations, but there is a 10% increase in machine price, which that increases your capex for a site considerably, since the machine price is the majority of the cost, right? But it's not all of the cost. So for sake of easy math, let's call it half, right? So for a new site, you're saying, okay, we have a 10% increase. That's a 5% overall increase on the cost of developing that site. Now let's look at another really big cost center in the ongoing operation of that site, which is the cost of power. And say, for sake of argument, you're somewhere where you're able to avoid 50% of your transmission costs because of the flexible nature of your load, or you have some other power purchase agreement that allows you to avoid a considerable amount of your transmission costs. If those transmission costs then get reallocated by some tariff change, at this point I'm talking about um, rate change by the utility, or in a regulated market, some sort of change to or deregulated market, some sort of change to a demand response program or something like that. You could actually foresee, say your power cost all in is like, or no, not all in. We'll say your gross power cost is 5 cents without those extra transmission charges, but you then add like 2 cents on top of that for increased transmission charges. Any Bitcoin miner is immediately telling you, like, that is a orders of magnitude difference in profitability versus a 5% increase in your hardware costs. Or sorry, a 10% increase in your hardware costs, which then increases your cost to build out new megawatts by 5%, which again is a rounding, and that's not exactly accurate. But when we're talking about those kinds of numbers and the transmission cost changes, it not only it makes some sites unprofitable. It has that drastic of a change, whereas people will figure out ways around the tariffs, right? S19s that are already in the country will be XPs, S21s that are already here will have a little bit longer of a shelf life, because they're just that much more, just small, incrementally more profitable to run a little bit longer because of the increased cost of the new machines. Again, people are creative, businesses are creative. What you really can't get creative, you cannot get creative around paying power costs and paying transmission costs. Those are universal. And I think everybody has their power cost conversation. They've had that for years. Everyone understands, forward-looking prices, price of natural gas in some areas, the futures of natural gas greatly affect the futures of power costs, and how cold or hot it is in the winter. Everybody's been thinking about that for decades, right? What people haven't been thinking about is the potential for transmission cost increases.
Well, it's good to know we don't have two things to worry about. We just need to focus on the transmission costs, and that the
I'm not
tariffs are
saying
going to.
tariffs aren't something we should worry about. I'm just saying they pale in comparison to other challenges.
A David versus Goliath in that sense. And one of the things that you just brought up as well, and I think that we should slowly wind this. I've got only one more slide and maybe one more topic for us to talk about, because otherwise it seems like you and I could talk forever. Is the opportunity and challenge, and you just kind of hit upon this, that I think people are going to be like in the last bull run. I assume that this will happen should the Bitcoin price start to go up and the attention comes to the space, and people not only are like buying it spot, but they also realize that they can mine it, and that has other tax advantages. And you can also get a lower Bitcoin price depending upon the efficiency of your machine. The opportunity and the challenge that it kind of exists simultaneously is the opportunity right now is there's still a lot of machines that are profitable and they're very, very cheap from where they maybe could be, the challenge, in 6 months. should Bitcoin price kind of go up. And I think that as people, the Bitcoin miners and people who are going to get into Bitcoin mining, like you called out, it's so much easier to figure out a 10% increase in hardware. Like that's, if that's the price to play the game and everyone has to do it industry wide, that's okay. Like we're just going to have to pay that and move forward, as opposed to something that is really influencing the month over month MRR and the OpEx. That's just a completely different conversation. So, and I think it's from a forecasting standpoint also would just be, a knife in the ribs for a lot of people. I just want to call that out, the hardware, because no problem shilling, go on compassmining.io and check out some of our hardware, because right now, a lot of it is still super undervalued. If you are aware and you look back historically at what happened, at least in 2020 and 2021, where hardware prices just got out of control and they went up not by 10%, but double or tripled. So I think I wanted to call that out. And then the last thing that I just think we should talk about are the 2025 events. These are important. I always talk about the IRL being so important in a digital landscape like Bitcoin and like Bitcoin mining, where it's really decentralized. People are all over the country, all over the world, making sure that this industry moves forward. And so the 2025 events that I know that Compass is going to be at, and we're probably going to be at others, but I just want to kind of call these out on this episode. We're going to be at Las Vegas in May, and we're going to be at Mining Disrupt in March. And then we're going to be at a litany of other events that are just going to, but those are kind of like the headliners. So I kind of wanted to call that out, and just also say that every week in 2025, we're going to be having Talk Mining Tuesdays on Tuesday evening at 6 p.m. We have every third Wednesday, we have Mining Metrics, which is a live show with Luxor where we dive into the metrics of Bitcoin mining. And every week we have a podcast coming out, and a long form and a short form podcast. And I feel like there's other stuff that we're doing, but that's where we're going to be, both digitally and IRL. And I'm sure we're going to be in more stuff, but you guys have your own events that you put on great events at Texas Blockchain Council. Do you want to talk about those and maybe some of the other things you're really looking forward to?
Yeah, I think the two that come to mind that will be most interesting for your audience, Jarrett, is NAPE, which is the largest oil and gas energy conference in North America. It happens in Houston every year. We will have another Bitcoin mining pavilion there, which will be in the showroom at NAPE, based upon our partnership with NAPE that we've had over the last couple of years. And so I know there'll be folks from this ecosystem that will be speaking. I will be emceeing, and that's coming up this February. And so I think a lot of folks will be interested. Amy's got the info for you right there. If you are planning on going to NAPE, the TBC does have a discount code, because obviously the event is not put on by us. It is put on by NAPE, the conference, the Association of Landmen. I'm missing something in that acronym. It's AAPL, I think. And the conference itself, they always do a great show. They've been doing it for many, many years. There will be a lot of Bitcoin mining stuff, more Bitcoin mining stuff at NAPE this year than there's ever been. And of course, our annual summit. We have lots of monthly meetups in Houston, Austin, and Dallas that will take place this year. It's kind of TBD on those exact dates, but our annual summit will be in November 2025. We just had it at the Bush Presidential Library this last November, and we'll be back in probably in Dallas in 2025 for the 2025 summit.
Great. So NAPE and NABS, those are easy to remember. And I'm going to put the link that Amy just shared that I threw up on the screen kind of haphazardly. I'm going to put that in the episode description. So make sure you go ahead and check that out. And I think with that, we have come to the end of the show. I want to thank you so much, Lee, for taking the time. And if you're watching this on YouTube or listening to this on a podcast platform, please go ahead and subscribe. Make sure you're following us at Compass Mining on LinkedIn, X, and YouTube. And I'm going to go ahead and Lee, I'll leave all your information, all Texas blockchain information, and especially the NAPE information. And if you guys have that code, I can put that as well in the episode description. And thank you for taking the time. I'm excited for 2025. I know you are too. And this has been great.
Thanks, Jarrett. Yeah, I appreciate you having me on.